Azar Jammine from Econometrix, live from our studio in Sea Point. Welcome to you, Azar. This is all about inflation, but the rand is getting better, the oil price is coming down. Has the Reserve Bank overreacted at all?
One could argue that it has overreacted. A couple of weeks ago, the signals that were being given by the Reserve Bank all pointed to the fact that it would increase interest rates. Overseas, interest rates are rising. Our inflation rate is not falling as much as that of other emerging markets. According to the Reserve Bank's own analysis, our monetary policy is extremely accommodative. And also, people believed that the retirement of Brian Kahn from the Monetary Policy Committee would tilt the balance of that committee in favor of hiking rates. But in the past 2 weeks, you've had a dramatic fall in oil prices and a sharp strengthening in the rand-dollar exchange rate. And as a consequence, we can be looking forward now to a petrol price reduction of up to R1.75, R1.80 per litre next month, which is going to bring inflation for December down to 4.5%. And yet the Reserve Bank's current forecast came down from 5.4 to 5.3% rather than 4.5%. So I thought that they might say, leave it for the moment, because the outlook for inflation is so much better now than it looked even 2 weeks ago.
They are being then safe rather than sorry. Is that the way to go?
That is the message that Reserve Bank Governor Lesetja Kganyago gave us. Towards the end of his speech, he said they could adopt the attitude, well, you know, let's hold off, let's hold fire for the moment and wait and see what happens early next year. But instead they've decided to be preemptive and to go for broke now and increase rates now in order to preempt the possibility of having to increase interest rates faster next year. But what it does mean is that the way things look now, we're not going to have another interest rate increase for many months to come.
Okay, so at least it'll steady off. People's repayments do go up. We were looking at house payments, for example, even at 25 basis points. So in layman's terms, you know, there's not only the pain. Why could it be beneficial for the man on the street to have this tweak in interest rates?
Well, I don't know that it's beneficial in the short term. In the short term, it's going to be a little more painful, with the exception of pensioners who will receive a little more income from this, but they're in the minority compared with the majority in the economy. But against that, one must realize that there's going to be the counterbalance of a massive boost to disposable income from the impending huge cut in fuel prices. So at the end of the day, I don't think the man in the street should be too worried and too badly off as a result of this. And in the hope that in the longer term, it might mean that the man in the street will pay less interest ultimately than, even though in the short term they'll be paying more.
So short-term pain, long-term gain. The Reserve Bank seems to be hitting back at the narrative, and maybe we should discuss it because it's growing. The narrative that interest rates should be low to aid growth, but there are dangers to that, aren't there?
It's a balancing act, and you're quite right, and the Reserve Bank is right. There's no panacea in reducing interest rates in order to boost growth, because the fact that our economy is not growing is due to a whole lot of structural factors, not because of the level of interest rates. But then to increase interest rates at a time when the economy is as weak as it is and inflation looks as if it's going to be falling in the short term, some people say, as you introduced the fact that maybe it's an overreaction right now.
It does aid investment as soon as the investors get a better return here. What did we see in terms of rand reaction today, and what do you expect in coming weeks or so?
The short-term reaction was very favorable, because these investors who swing their money, their flows in and out of currencies, thought, oh, what a wonderful opportunity now. Go for the rand, you can get an even higher interest rate on your short-term deposits. Let's go for it. In the short term, it's very useful. But you know, the danger is, if it does crimp growth that much more, then they'll turn around and start complaining that economic growth is too weak and start taking their money out again. So I would not pay too much attention to the initial positive response in the exchange, in the currency markets.
All right, let's leave it there. Thank you. Brilliant analysis as always, Azar Jammine from Econometrix.